All right, hello and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's video, just a quick disclaimer how we start each of our podcasts. Nothing in this podcast or any of our other materials should be taken as investing advice. Today we're going to be talking about cryptocurrencies, which always adds a little bit extra risk. So make sure you do your own work and consult a professional before making any investment decision. With that being said, the topic of today's podcast is going to be the Bitcoin spot ETFs. Now, over the past few months, there's been a lot of hype among crypto and Bitcoin bulls about the possible approval of ETFs to be sold on and traded on the major exchanges. The basic rationale was that with exchange traded funds tracking Bitcoin, it could lead to huge inflows from people who otherwise would not be able to access Bitcoin, and that would lead to huge upward buying pressure on the price of Bitcoin. Now, we were skeptical of these arguments for a couple of reasons. The first being that the price of Bitcoin in anticipation over the past several months had already pumped up the price of Bitcoin by a huge margin. And the second point was that we've already seen similar ETFs, Bitcoin Futures ETFs, and spot Bitcoin ETFs from other countries trading, and they failed to get the amount of inflows and effect on the price of the underlying Bitcoin that that many people had hoped. So the ETFs were approved just last Thursday. They started trading, and instead of spiking the price of Bitcoin massively, the price of Bitcoin has since then, in the past couple of days, actually declined by about 8%. So that's going to be what we're going to be talking about today. And so, James, you want to take it over and kind of examine why and what's been going on with Bitcoin?
Yeah, so first, it makes sense to just look at the inflows of the ETFs themselves. So we're recording this podcast as of Saturday. The Bitcoin ETFs first started trading on Thursday. So they've had 2 full trading days, Thursday and Friday, to collect inflows. So let's look at what these inflows were and how those sort of match up to people's hype and expectations. So you can see these are the AUM change. That's the inflows they had in the first 2 days, denominated in millions of US dollars. So some of them have the most successful one was the IBIT from BlackRock, which has got $500 million of inflows. The second most successful was the FBTC from Fidelity, and that got 427 million of inflows. And there's also the BITB from Bitwise, which got 225 million. And there's a bunch of other issuers that also have launched ETFs, but they have garnered much less interest, much less inflows. Now, what's interesting, if you look at the bottom two, GBTC and BITO, those have negative numbers for the inflows on the first 2 days. And the reason why they had negative inflows is because GBTC and BITO already existed beforehand. So GBTC is the Grayscale Bitcoin Trust. It was a closed-ended fund that held Bitcoin, and it's been around since a long time ago. I think 2013 it was founded. And on Thursday, when all the Bitcoin ETFs were approved, GBTC GBCT transitioned from a closed-ended fund to an open-ended ETF. And since then, there's been actually about $100 million worth of outflows from GBTC after that conversion. And the second is the BITO Bitcoin Futures ETF. That saw an outflow of $265 million. And that is not a spot Bitcoin ETF. It's a Bitcoin Futures ETF. So before the approval of the spot Bitcoin ETF, the only way, if you wanted to buy an ETF to get exposure to Bitcoin, your only option was the Bitcoin Futures ETF. Now, the whole idea of why the spot ETFs are bullish is because the idea is that people would rather own the spot ETF as opposed to the futures ETF, because the spot ETF will have a smaller tracking error relative to the price of Bitcoin itself, while the futures ETF because you're, adding another layer of complexity with the futures, it will have a greater tracking error. So as expected, there were about $260 million of outflows out of BITO, and presumably that money went into the new spot ETFs. So if we add up all of those, all of the inflows from the newly approved ETFs, minus the outflows from GBTC and minus the outflows from BITO, we get about $1 billion of net inflows in the first 2 days. With that being said, there's another thing we have to take into consideration, which is the seed funding of the ETFs. So to launch an ETF, the issuer has to have seed money of at least $2.5 million just to provide liquidity and whatnot for the ETF to launch. Now, it's also possible for the issuers to have seed funding of greater than $2.5 million. And in fact, it's been reported that Bitwise, BITB, they had secured seed funding of $200 million. It's also been reported that BlackRock, IBIT, had secured seed funding of $10 million. And HODL, which is the Van Eck ETF, had secured seed funding of $72.5 million. So these are, these come from institutional investors who, committed or indicated that they would purchase shares of the ETF, and they made that indication before these ETFs even started trading. So in my opinion, it's not really fair to consider those as inflows from the first 2 days, because those were already pre-planned money that was going to go in. And that was about $300 million. But for simplicity, let's just include these seed funding as the total inflows. And so within 2 days, we had $1 billion of net inflows into the Bitcoin spot ETFs. So let's put this $1 billion into context and try to see, how much of an impact on the Bitcoin price this, should be expected to have. So this chart here shows the average daily trading volume of Bitcoin. And it is, it's very volatile from day to day. But if you see kind of the period in 2020 and 2021, this was during the pandemic and during the massive bull market for Bitcoin. There was a lot of interest in Bitcoin, a lot of new people entering into the market. And if you look during that bull market, the average daily trading volume was about 300,000 Bitcoins per day. And then in 2022, with the crypto winter, that trading volume decreased substantially to about 200,000 Bitcoins per day. And now in 2023, especially in anticipation of these, spot Bitcoin ETFs being released, being approved, and, the massive rally we've had in Bitcoin over the past, 6 to 9 months, this has caused a lot of interest from investors, and the average daily trading volume for Bitcoin has increased to about 500,000 coins per day over the past few months. So if we take that 500,000 coins per day, that $1 billion of inflows over the first 2 days of it. So 1 billion of inflows in the first 2 days. That's about $500 million of inflows to these ETFs per day. At the current Bitcoin price, that represents about 12,000 Bitcoins per day. Now, if we take that 12,000 divided by the 500,000 of total trading volume, that's only about 2% of trading volume, right? So the inflows we've had so far for these Bitcoin ETFs is only 2% of trading volume. And it's hard to see how that would have a huge impact on the price of Bitcoin. And indeed, since the ETFs were approved on Thursday, the Bitcoin price has actually declined by 8%. So that kind of further proves the point that the inflows that we've seen thus far have been, underwhelming and insignificant compared to the total daily trading volume of Bitcoin. So now we need to talk about the Grayscale Bitcoin Trust, or GBTC, and that's, a couple slides ago we showed that, since it converted to an open-ended ETF 2 days ago, um, it it has seen $100 million of outflows. So what exactly is GBTC? It was created all the way back in 2013, obviously before spot ETFs were approved. So it was not structured as an ETF. It was structured as a closed-ended fund which owns Bitcoin. How the closed-ended fund works is that an institutional investor can buy Bitcoin, give that Bitcoin to Grayscale. In return, Grayscale will give them shares of GBTC, which trade on the over-the-counter markets. And uh, because of how it was structured as a closed-ended fund, Bitcoin could only go in. Bitcoin can never leave. So with an open-ended ETF, the number of shares outstanding of that ETF will increase and decrease based on the net inflows and outflows. But for a closed-ended fund, um, it's impossible for the number of shares to decrease. The number of shares can only increase as more institutional investors deposit Bitcoin and create more shares of GBTC. But there's no method of decreasing the number of shares. There's no method of taking your Bitcoin out of the trust. So up until about 2020, there was a lot of interest from investors to buy GBTC. A lot of investors, institutional investors and the like, who were not able or not allowed to buy Bitcoin directly, um, would buy GBTC as a proxy for owning Bitcoin, because obviously it's a closed-ended fund that owns Bitcoin. So the price of GBTC's shares should, in theory, correlate with the value of the Bitcoin in the trust. So up until about early 2021, the shares of GBTC traded at a significant premium to the value of the Bitcoin in the trust. And this created an arbitrage opportunity where institutional investors could buy Bitcoin, deposit it into Grayscale, get the GBTC shares, which traded at a premium, and then sell those GBTC shares for a higher price. That created a massive arbitrage opportunity. And if you look kind of at the beginning part of this chart, the blue bars are the total number of Bitcoins held by GBTC, and it increased massively. That's because all these institutional investors were taking advantage of the premium by depositing more and more Bitcoin into the trust so that they could get the shares, which they can sell for a premium. Now, starting in about early 2021, that that premium turned into a discount, and there's a few reasons for that. First of all, more and more brokerages started allowing people to buy Bitcoin directly, and also the trust had just gotten so big that there were so many shares outstanding that there weren't, enough people interested in buying the shares to maintain that premium. So for those reasons, people were less interested in, wanting to buy GBTC shares. So instead of trading at a premium, it started trading at a discount. And the discount got, very big. I think it was as big as like 30 or 40% at some points. Now, once GBTC started trading at a discount, a lot of people started, there became a new bull case. And that bull case was that eventually GBTC could transition to an open-ended ETF. Once it transitions to an open-ended ETF, there becomes a mechanism to, sell your shares, and then the Bitcoin in the trust will be liquidated, and you get that cash. So once it turns into an open-ended ETF, kind of by definition, by how the mechanics of how an open-ended ETF works, the value of the shares has to equal the net asset value, so that discount will collapse. And that is indeed what happened when they transitioned to an open-ended ETF on Thursday. But during this period, it got, GBTC got to be huge, and it owned something like 600,000 Bitcoins at its peak, which was about 3% of all the Bitcoin in circulation. And that's today valued at about $28 billion or $26 billion or so. So there was like $26 billion that was trapped into GBTC. And now that it's transitioned to an open-ended ETF, all of that money can theoretically be withdrawn for the first time ever. And if you look at these blue bars, which is the value of GBTC's the number of Bitcoin that GBTC holds, increased massively until early 2021, and then it started decreasing at a very slow linear rate. And so, as I said earlier, it's impossible to take Bitcoin out of the trust. So how is it the case that the Bitcoin, the number of Bitcoins has been gradually decreasing? And the reason for that is because Grayscale charges a 2% management fee on the value of the Bitcoins they hold. So basically every year they sell 2% of the Bitcoins for their management fee. So it's been decreasing at a rate of 2% per year. But there has been no withdrawals other than that management fee. Now, the question is, what's going to happen to this $26 billion of Bitcoin now that the GBTC has converted to an open-ended ETF and the money can, in fact, be withdrawn? So when they transitioned to an open-ended ETF, they reduced their management fee from 2% a year down to 1.5% a year. But that is still much greater than the fees charged by any of the other ETFs. So currently the lowest fee ETF is the Bitwise ETF, which only charges 0.2%. Grayscale is now charging 1.5%. So logically, you would expect pretty much everybody who owns shares of GBTC to eventually sell their shares and then invest in a cheaper alternative. And not only that, but there was a lot of people who purchased GBTC when it was at a massive discount, and they were probably just playing the discount. They weren't necessarily even bullish on Bitcoin. They just saw that it traded at a massive discount and thought that it would eventually be able to convert to an open-ended ETF. So we're only buying it to play that discount. So logically, we would expect this $26 billion of assets under management at GBTC to decrease massively going forward. Now, there's only been about $100 million worth of outflows in the first 2 days. And one of the reasons why it might take a long time for these outflows to materialize is that a lot of people who own it might have, significant unrealized capital gains on their shares. So they might, wait until the next tax year or whatever to strategically realize those capital gains, to offset against losses and whatnot. But eventually, we should expect this $26 billion to be sold off, in which case that will actually cause net selling pressure on Bitcoin. So that's something that you really need to consider, because most people, most of the crypto bulls were talking about this the spot Bitcoin ETFs, about a massive positive catalyst because it'll cause all these net inflows, but that's going to be offset by outflows from GBTC. And so, as we said earlier, in the first 2 days, there has been $1 billion of net inflows into these ETFs. But, obviously, that's just the first 2 days. It'll take some time. Eventually, more people will get comfortable with these ETFs, and maybe over time, there will be even more inflows, and then the assets under management of these ETFs could increase. Could increase quite a bit more. So, what would be a realistic expectation of how much AUM these ETFs can eventually achieve? And so, this one of the simplest ways to look at it is comparing Bitcoin to gold. And a lot of people, a lot of the crypto bulls will say Bitcoin is digital gold. And the investment case for owning Bitcoin is similar to the investment case for owning gold. So we can look at, this is from a recent article from CoinDesk. And they said that there are currently 35 gold ETFs in the US with total assets under management of about 118 billion. And then, according to a recent study, given Bitcoin's roughly 3.6 times higher volatility compared with gold, investors would need approximately 3.6 times less Bitcoin than dollar denominated gold to achieve an equivalent level of risk exposure. This would still translate to an additional demand of nearly $30 billion for a Bitcoin ETF. So I think this analysis, broadly makes sense. If you think about Bitcoin is obviously a far more risky asset than gold. So as somebody is somebody, even if somebody wants to own Bitcoin as part of their portfolio, chances are it would be a smaller percentage of their portfolio than gold would be, given the increased risk and volatility associated with Bitcoin. So this 30 billion number seems like it could be reasonable. So what would that actually mean for $30 billion of inflows into the ETFs? Well, as we said earlier, there's already $26 billion in GBTC, which will eventually be sold, for a variety of reasons, not least of which is the, exorbitant 1.5% expense ratio. So whatever inflows these ETFs get, to reach up to $30 billion, that's going to be almost completely offset by the 26 billion of outflows from GBTC. So it's kind of hard to see a massive bull case from these ETFs. And another thing to consider with the gold comparison is that gold is difficult to buy directly. I mean, you can obviously buy gold directly, but there are significant shipping costs, and then you have physical gold. You have to store it somewhere. You have to get a safe or something. You have to find a safe place to store it. There's a lot of issues with buying physical gold, which makes the ETF a much more attractive option, much more easier to buy. Now, in the case of Bitcoin, you can easily, make a Coinbase account and buy the Bitcoin directly. Obviously there are some cases when it's like a wealth manager or whatnot, they might not be allowed to buy Bitcoin directly. So then they would buy the ETF instead. But that's, a niche use case. If you think about it overall, the difference between the difference in ease of use between physical gold and a gold ETF is much greater than the difference of ease in use between buying Bitcoin directly and buying a Bitcoin ETF. Therefore, if anything, we should expect even less inflows into Bitcoin as compared with gold. And then, as a final example, we can look at the history of BITO. That's the Bitcoin Futures ETF. That was launched in October of 2021. Apologies that the axis is in days, but so it starts at October of 2021. It's been about 560 days from now, and the end of this chart is January 12th, 2024. So throughout its whole lifetime of about 2 years, a little over 2 years, it has achieved $1.9 billion of assets under management. And that is pretty small in the grand scheme of things, given that Bitcoin has a market cap of almost $1 trillion. $2 billion is a drop in the bucket. And BITO, the Bitcoin Futures ETF, prior to this past Thursday, when the spot ETFs were approved, this was, the only ETF that tracked Bitcoin. It did it through futures, so it wasn't exactly the same as a spot ETF, but it was very similar. And that was an ETF, so it could be purchased by any wealth manager or advisor or whatever who would be able to buy a spot ETF. They also had been able to buy the Bitcoin Futures ETF, yet the assets under management only got to $1.9 billion. So that, I think, also is, giving a reason to doubt kind of some of the massive claims that some of the crypto bulls have made, saying, oh, there's going to be $100 billion or $200 billion of inflows. Well, if we look at the history, I think we should expect much lower inflows than that. And then, as we talked about earlier, the price of Bitcoin has increased massively, 72% over just the past 3 months or so, all in anticipation of these ETFs being approved. And then, so here, this, if you look at the right of the graph, this peak on January 11th, that is when the Bitcoin ETF was actually approved. And since then, there's been a decline in the price, an 8% decline in the price. So this really has been a classic buy the rumor, sell the news type of event where people got all massively hyped up for these ETFs to be launched. They were indeed launched on January 11th. And then right after that, the price started to decrease. And this reminds me a lot, if you remember from a few years ago, the whole Dogecoin, the whole Dogecoin mania. So the price of Dogecoin peaked on May 5th, or early May. And there was a lot of hype around that time, if you remember, around Elon Musk, because Elon Musk had made various tweets and comments about Dogecoin, and the Dogecoin bulls view that as very positive. The fact that Elon Musk is talking about this means that more people will get interested in Dogecoin, buy Dogecoin, and the price will go up. And there was a huge amount of anticipation around a planned appearance that Elon Musk was going to have on Saturday Night Live. And then everyone was speculating, oh, is he going to mention Dogecoin at Saturday Night Live? And if so, this is going to be some huge event and send Dogecoin to the moon. So on May 9th, I believe, or May 8th, Elon Musk indeed went to SNL and he indeed mentioned Dogecoin at a Saturday Night Live appearance. But instead of the price increasing, as everyone had expected, the price actually tanked 30% during the show. And the reason was because, again, a buy the rumor, sell the news event where everyone knew Elon Musk was going to talk about this Dogecoin ETF, about Dogecoin. The price had increased massively in anticipation, and everyone was planning to start selling immediately after that catalyst. So indeed, everyone started selling after the event, and then the price tanked. And this is basically the same thing that we've had with the Bitcoin, is that everyone was buying Bitcoin in anticipation of this event, the spot Bitcoin ETF approval, and then everyone foresaw that when it indeed happened, then that's when the dump came. So I think this shows why you really had to be careful when you get involved in one of these, speculative manias of hype, is that when everybody knows about it and everyone is getting hyped up about it, well, that shows that once the event happens, the price action can be the opposite of what you predicted.
I think it's also a really telling example of investor psychology in general, and that, like, leading up in the past few months, leading up to this anticipated Bitcoin ETF approvals and started trading as ETFs, there's a lot of like very, very well respected people in the crypto industry from real companies that trade cryptos, talking like very, very positively, predicting 100 or even multiple hundreds of percent of positive buying pressure on the price of Bitcoin as a result of this event. And it's only been a couple days, and we'll see what happens over the next few days and weeks. But not only has that not happened, but it's actually gone down significantly. And it just kind of shows the danger of believing that catalyst is going to go the way that you want it just because that's what you feel or that's the outcome that you want, right? And we have another one of these potential catalysts coming up that I've seen a lot of articles that are very positive on the Bitcoin halving event that's going to come up in the next few months. And in our video from a couple months ago, we talked about that briefly as well, and why we're a little bit skeptical of those arguments as well. So I think it's very important to not just get caught up in the temptation to believe in something that just because it's your desired outcome or what you feel based on how things have happened in the past.
Yeah. So I think that about wraps it up for what we had to talk about today. As always, if anybody in the viewership has any thoughts on the Bitcoin ETF or Bitcoin in general, please let us know in the comment section below. And as always, thank you for watching, and we will see you on the next one.